Market. What if the E is completely underestimating one of the fastest growing AI infrastructure companies on the planet? A company that just transformed itself from a forgotten tech relic into one of the biggest names riding the artificial intelligence boom. And now, some analysts believe this stock could be heading toward a massive new price target of $250. But here is the real question. Is this the beginning of another monster run, or are investors chasing hype at exactly the wrong moment? Today, we are talking about Nebius Group, ticker symbol NBIS, a stock that has been exploding higher, grabbing attention from Wall Street, retail traders, and even some of the biggest players in technology. This is not just another AI stock story. This is a story about infrastructure, execution, and whether one company can build the backbone of the next generation of artificial intelligence before competitors catch up. So buckle up, because by the end of this video, you are going to understand the latest price targets, the technical analysis setup, the major risks nobody is talking about, and the exact levels traders are watching right now. First, let us talk about why NBIS has suddenly become one of the hottest stocks in the market. The biggest reason is simple: growth, and not normal growth. We are talking about explosive, eye-popping numbers that immediately make institutions pay attention. Nebius recently delivered quarterly results that shocked many investors. Revenue surged dramatically year over year as demand for AI infrastructure continued accelerating. But what makes this story different from countless AI hype companies is that Nebius is not just selling promises. They are building real infrastructure with real demand behind it. Artificial intelligence companies need enormous computing power, massive clusters of advanced GPUs, giant data centers, and access to electricity on a scale that sounds almost unbelievable. That is exactly where Nebius is positioning itself. Instead of competing directly with flashy AI software companies, they are trying to become the company powering them behind the scenes. And that strategy may already be paying off. One of the biggest catalysts driving bullish sentiment is Nebius's relationship with major technology partners. In a market where access to premium AI chips is everything, Nebius appears to have a serious competitive advantage. Investors believe that strong partnerships and hardware access could give the company a major head start, while competitors struggle to secure enough computing power. Now let us talk technicals, because the chart is where things get really interesting. NBIS has been showing the kind of momentum traders dream about. The stock recently pushed into fresh highs, confirming strong bullish momentum and keeping buyers in control. When a stock stays above key moving averages and continues printing higher highs, traders usually view that as a signal that institutions may still be accumulating shares. But before you start thinking, this thing only goes up, there is an important reality check here. Momentum stocks can become overheated very quickly. Even the strongest companies experience pullbacks, especially after huge runs. Technical indicators suggest that while momentum remains bullish, short-term consolidation would not be surprising at all. In fact, healthy pullbacks are often necessary before another move higher can happen. That brings us to the big question everybody wants answered. Can NBIS really hit $250? The bull case says yes. Supporters argue that if Nebius continues scaling its AI infrastructure, executes on expansion plans, and maintains strong demand, today's valuation could eventually look cheap in hindsight. Some analysts believe the market is still underestimating the long-term opportunity because artificial intelligence demand is growing faster than expected. Think about it this way. Every major AI model, chatbot, image generator, and enterprise system requires computing power, and somebody has to build the infrastructure supporting all of that growth. If Nebius successfully becomes one of those backbone providers, this company could potentially grow into something much larger than investors currently expect. But there is another side to this story. The bear case is very real. Scaling AI infrastructure is incredibly expensive. We are talking about billions of dollars in spending on data centers, power, GPUs, and operational costs. Growth stories look amazing when everything goes right, but execution mistakes can become brutally expensive. Delays in construction, permitting issues, customer concentration risks, or weaker than expected spending from large clients could slow growth significantly. And in momentum stocks, sentiment can shift extremely fast. That is why traders are paying close attention to specific price levels. Right now, many investors are watching support zones closely. If NBIS can continue holding key breakout areas and maintain strong volume, bulls believe momentum could continue toward higher resistance zones. But if the stock starts losing major support levels, short-term downside pressure could appear quickly. For aggressive traders, momentum breakouts remain the key signal. Confirmation through strong volume matters because breakouts without conviction often fail. On the flip side, patient investors may prefer waiting for pullbacks rather than chasing extended rallies. And then there is the short squeeze possibility. This is something many retail traders are closely watching. Stocks with strong momentum and elevated short interest can sometimes experience violent upside moves if bearish traders are forced to cover positions quickly. When momentum, bullish sentiment, and options activity all align, price action can become extremely explosive. But here is the truth nobody likes hearing. No stock moves in a straight line forever. Even the best companies experience corrections. Even the strongest trends cool off. The real question is not whether volatility happens. The question is whether the long-term thesis remains intact after volatility arrives. For Nebius, everything comes down to execution. Can they continue expanding infrastructure fast enough? Can they convert growing demand into actual revenue? Can management